Is the limited personal liability offered by corporations absolute?
It is not absolute.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, welcome to another edition of Ask Spurrell CPA. Today we're talking about shareholders versus directors in corporations. So, Trevor, is this one of the things that you're a journeyman electrician, they teach you about shareholders and directors in electrical school?
Absolutely not. They don't teach you those things in electrical school. All they teach you is all the things that you need to become a good electrician. And I think today is a very, very good topic that a lot of people who are in trade school want to have their own business afterwards.
Yeah.
And most start out as sole proprietors. So I think we need to get some better understanding on these topics we're talking about today.
For sure, yeah. And the quote that we'll go back to, it's the old Michael Gerber quote, author of our favorite E-Myth. The fatal assumption is if you understand the technical work of a business, that you understand the business that does that technical work. And the statistics is, that 50% of all Canadian small businesses will fail. And the second biggest reason that they're going to fail is they're going to run out of cash. And that can be very important if you're a shareholder or a director. To understand the consequences that go with that. And the story that we have are, business owners, they're getting other people involved in the corporation, family members, friends, and they're often overly fearful of becoming a shareholder of a corporation, but they're probably not fearful enough of becoming a director, is usually what it is. So, Trevor, what are the questions you think these business owners should be asking?
So who owns the corporation, shareholder or directors?
So the shareholders, they are the owners of the corporation. So not the directors, but the shareholders. These are actually the owners of the corporation. And the different share classes will show, how much, and the number of shares will show, what percentage of the company that they own.
Okay. So who elects the directors?
So the shareholders are the ones that elect the directors. So whoever owns the company gets to decide who the director of the company is.
All right. So now are the directors then responsible for the ongoing business of the corporation?
That's right. So then the shareholders, they own the company. They elected the directors, but then the directors are really responsible for the ongoing business of the corporation. They're the ones that are effectively making the decisions, although the shareholders are the ones that elected them in the first place, can get them out if they don't want them there anymore. In most small businesses is usually how that's going to work. But it's important to know shareholders own the corporation. The shareholders then elect the directors, and the directors are the ones who are responsible for the decision making thereafter.
Okay. So do corporations offer personal protection from lawsuits?
Yes. So the corporation is one of the big benefits of being incorporated is what we call limited liability. And it reduces the risk of any lawsuit being brought against you personally. So although the corporation can get sued, just like anyone can get sued in any facet of business, the chances are is that they're going to have to sue the corporation and not the people behind the corporation.
Okay. So is the limited personal liability offered by corporations absolute?
It is not absolute. And that can be one of the false senses of security. I'm incorporated, there's nothing that can ever happen to me. Although it dramatically reduces the risk of anyone being sued personally for their personal house, personal savings, their car, any other personal assets, it's not absolute. It's not 100% that they're not going to be able to pierce the corporate veil and go after the individuals behind it.
Okay. So if individuals are sued, will it be against the shareholders or the directors?
It's 9 times out of 10 going to be against the directors. So the whole point of being a shareholder of a corporation is you have the risk, you have the ability to participate in the profit and loss of the corporation. If the corporation does well, you do well. But if the corporation loses, the whole purpose of being a shareholder is you can't lose more than what you invested. That's the whole principle of being a shareholder. That's why when you invest in public companies on the stock market, you're worried about losing your money, but you're not worried about losing more than your money. You can only lose that investment. You spend $100 to buy shares in TELUS. If TELUS sues and goes bankrupt, you won't get your $100 back. but you can't be held responsible for more than $100. This is the same thing virtually in a private corporation. Is your shareholder ownership, that does not subject you to personal liability. But being a director, although having a corporation itself limits personal liability, being the director, that's what usually opens the window.
Can shareholders often be asked to sign personal guarantees?
Shareholders can be asked to sign personal guarantees, and that will open the door for some personal liability for them. So often people are they're a little bit nervous about becoming a shareholder of a corporation. Becoming a shareholder is usually a pretty low risk proposition, as long as you haven't signed any personal guarantees. If you've guaranteed the $300,000 loan as a shareholder, well, that's a whole different story. You've just guaranteed it. But just being the shareholder, pretty low risk. Being a director, it's a little bit more risk. But operating as an unincorporated company, it's usually the highest level of risk.
Right. So if there are no personal guarantees, should share ownership be scary?
Generally, that on its own should not be scary. So, if you want to own one share of a company for tax purposes, to do a little bit of split income, or to participate in the the profits of the company in a tax efficient manner, that in itself shouldn't be your barrier, because it's generally not going to open you up to that much of a liability either way.
Okay, so is it always wise for both spouses to be directors?
Not always. So the directors is, that's what generally opens you up to liability. You've got a big construction bond, and they're insisting that the directors be on the hook. If they're insisting that directors, assume some of that liability. So really what happens is, by being the director, now you're assuming some liability. So if all the shares are owned in one household, why do we want 100% of the household assets on the line when we can limit it to 50% of the household assets being on the line? So it's not always a good idea to have both spouses as directors. And I'm sure there could be some matrimonial family lawyers out there screaming at me for this sort of thing. And they're probably right that it probably creates some barriers to protecting that person's interest, but also you have to worry about, is this corporation going to get sued, and are they going to go after the director? So it's something that, you should be discussing with your lawyer and weighing against. But, we've all often gone down the road with clients, and after discussions with their lawyers, we've resolved to have only one of the spouses to be the director of this corporation.
Okay, so are directors personally liable for unpaid taxes?
There's the big one, and this is the one that can go sideways in a hurry. It can be the unpaid taxes. CRA can come after the directors personally, and it doesn't really have to be an act of gross negligence at all. They can just come after the directors for taxes. And a lot of people will think, well, if it's taxes, the business made money, so what's the point? The money should be there. But often it's the payroll taxes. They get behind on GST, they get behind on payroll, and now they have both spouses on the hook. And the payroll taxes can be hundreds of thousands of dollars, especially if we're talking like a general contracting business, and a project goes sideways in a hurry. And those unpaid liabilities, now they become personal liability, when one of the reasons why you incorporated in the first place was to avoid that personal liability. So it's a big consideration that a lot of business owners should take into consideration. Being a shareholder, not a big deal, unless you sign a personal guarantee, but being a director can be a challenge.
Right.
So thanks so much for joining us again today. As always, please leave your comments in the section below so we can use it for guidance on what to do in future videos. And please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds of business. Thanks very much.